money to make the transactions. We need money to exchange values. We need money to store our asset. We need money to do anything we are dreaming of. So before we aim to dig in, what is fintech? What is the future of fintech, which will happen later part of this entire program? We're going to start with the fundamental question of what is money? Or what is the future of money will look like? So my first question will start a little later, but before I start my question, we'll have a few seconds, 30 seconds, 1 minute self-introduction of our panelists. Please feel free to brag about yourself.
Thank you so much. Also, thanks for inviting for the panel and this amazing conference. It's been great so far. So, I'm Michael Gronager. I run a company called Chainalysis. We are based out of New York, and we are a fintech startup, or as we actually call ourselves, a recreational technology startup, RegTech. We do compliance on blockchains. So when we talk about money, I'm kind of the blockchain guy in the group here. And I probably have some other opinions of what money is, I think so at least, and the future of money as well. So what we essentially are able to do is we can trace the origin of funds on blockchain, and the biggest blockchain out there today is the Bitcoin blockchain. So we can trace the origin of funds, and we do that for law enforcement worldwide, mainly in US, collaboration with Europol, we work with bigger banks, and a lot of the Bitcoin startups as well.
So I am Paolo, Sironi, and I represent IBM Global Thought Leadership, particularly in wealth management, fintech analytics. That means everything which has got to do with investments or savings. So the other side of money, not the money you spend, but the money you save and the money you invest. I'm based out of Germany, but we really engage the community of wealth managers and banks worldwide on both sides of the equation. The innovative fintech, small companies that want to make it happen, as well as the incumbents that want to fight back. So how to transform the way we use the money together with the financial institutions in a digital world, and how we transform the way we use money together with the fintech companies which are trying to change the way business is conducted.
Hi, I'm Uday.
Oh, the mic.
Hi, I'm Uday. I'm the founder of Wealth Objects. Wealth Objects is a B2B technology company for banks, institutions, and wealth managers to launch their own digital wealth platform. So it's a B2B robo-advisor plus a lot more things in terms of PFM and everything else. So in terms of future of money, thank you for asking me to join the panel. My views on it, we'll probably discuss, but essentially we are in the space of wealth management and technology, and it deals with money, but not primarily retail banking, but I'll give you my views from a different point of view of working in the sector of financial services for the last 15 years.
Okay. For our general information, this panel session is not for just panelists in front of you. It is for everyone here. So what we're going to do, I'll be throwing several questions one at a time, and our panelists, the experts, the pundits, will share his ideas and thoughts. And feel free to please jump in, raise your hands, ask questions, add comment, if you will, challenge the idea. The purpose of this panel is not to share the idea and go home and study with it. It is to learn and develop what's coming ahead as future of money. Because we will be writing the history.
Can I also ask questions to the audience?
Of course.
Oh, good, okay,
of course.
be ready.
It's a two-way communication, I hope. All right, so here we go. We're going to start with a very fundamental, very basic, simply easy question, but it is a fundamental question. What is money? What is money? Money comes in many different forms and shapes. Back in the old days, primitive days, money was like in the form of a shell, a clay, a little iron of some form, okay? Nowadays we have a paper, we call it money. We have some digital money we are seeing today. What is fundamentally money? Anyone like to shoot?
Yes, so I think that one of the most important aspects of money is the convertibility. So of course you could have a house and you could call it money, but you probably wouldn't use it as money and say, well, I give you my house, I give you something else, because it's not really convertible easily. You need a lot of legal framework around it. So you need a high level of convertibility for it to actually act as money. So also I think that today we've seen a lot of different new forms of currency popping up. Perhaps the first one were in the virtual space. You see virtual funds in different virtual games and so on. And I think it all kind of started with the trading cards. So I think trading cards are a very good example of something that's actually ended up being used as money. So they got value because they weren't produced in high numbers, and they were, well, traded, got value. People used them not really to pay with, but at least to trade with to some extent. And then today we have a lot of different, well, virtual currencies, digital currencies and other things that's not really backed but have a value. So very much like silver or gold coins in the old days that moves around, and they have kind of not really an inherent value, but people perceive them as value.
So I would like to add more than a convertibility, to me, money is something that enables to transform something into something else. So it transforms labor into a salary. It transforms desires into an object or into a service. And in order to be able to do that, it needs to be recognized. So there has to be a consensus that money is accepted. But at the same time, there also has to be a consensus that the value I'm paying for when I use the money is the reasonable value. One of the challenges that the world is facing today is that on the one side, the value of the asset is not so easy to detect, financial bubbles, real estate, and at the same time, the way we use the money and we deploy the money on the financial services is very funny, the quantitative easing, so the central banks are throwing money like crazy, which is skewing somehow the intrinsic value of the banknotes we have in our hands or the money that we have in our bank accounts. And this is a transformational change, and can be very disruptive without us recognizing that, because we really moved from a capitalistic framework in the Western world into a monetaristic framework, where capital is not the essence, but money, and how you deploy money is the one that makes the biggest changes in terms of financial bubbles and trends in the financial markets.
Uday, would you like to share your thought?
A much simpler definition, I guess. I think for me, whichever the people in any kind of an economy are willing to accept as a means of exchange for any goods or services, I'd call it money. If tomorrow you tell me we're just throwing out all the papers in the bin and we're going to call it Bitcoin, or you're going to exchange a piece of leather for it, or if leather becomes it, I mean, it can be anything. You decide chocolates are going to be a form of exchange for doing an exchange of goods. It doesn't, I really don't, I mean, I don't think it's just, for me, it's a very simple definition. Any form that the people decide that they're willing to accept. So what I'm trying to say is if the ecosystem decides the change in the future, that they're willing to accept digital wallets and all of these means to sort of become the norm, then it becomes money.
I agree to an idea if people agree to exchange certain form of some token as money, such as shell, such as some iron piece, such as some paper printed copy. Yes, it is money, but can we say, let's use this as money, and you and I agree, and many of us agree? Can we make it like that? Can money be prompted like that?
No, we can't. I think the money needs to be regulated because the will of individuals can change over time, and somebody might be left with that pen and all of a sudden it's worth nothing because people have changed their mind. So money is a fundamental mechanism of the modern economies. It was also before, but just when we learned how to use a central bank to print money and to make sure that money was recognizable beyond the will of governments and individuals, that the world started thriving. So I don't think it's a spontaneous process. It cannot be.
Well,
So what you're essentially saying is that the money is the future promise. So as opposed to say, well, this thing has utility, so I'm willing to trade with it. So I could trade an iPad for you, for a laptop computer, or other things. And there's no guarantee tomorrow that that one would be worth anything. But the future promise comes from someone else. So it has a backing, like a government that says, I promise you this piece of paper will be worth something tomorrow. And that's kind of the proposition here.
In essence, yes,
Yeah.
even though that future is uncertain. because there can be a crisis or there can be inflation, so it's not that easy. But it has to be regulated because the value of money requires a third-party institution that helps you assess what the money really is, right? Even though, to me, my point of view is more what the money is for than what the money is, in essence, because I come from the saving and investments, so I would leave somebody else to deal with the problem of printing the money or making it available, and I'm more concerned with how we use the money and what we use it for. But then, in essence, if there's not a stable consensus around that, that future promise cannot hold. Fact that the promise also engages the futures means that even with money, with cash, there is a risk. Because if you have money in your bank account and inflation is high, in 10 years' time you will be left with nothing, because that is a mechanism to transform the value or the perceived value of a financial asset or a real asset. So money doesn't live in itself, is not abstract to the world. It's really the translation, and I believe that somebody is translating my funny English as well, is the thing that translated the value of a house into the possibility of buying that house. Now, the value of the house changes as well, and this possibility might change as well. So it is really interlinked into the value of assets.
Yeah.
I probably should substantiate my statement now. The point being, I mean, I'm looking forward, not backwards, where we used iron coins and everything else. I'm trying to say where we're going to go forward in the future is in the sense of digital wallets. And if all of a sudden the ecosystem in whichever country all of a sudden, or let me push the boundaries a bit here and all of a sudden say, let's take an example of a hypothetical example of all of a sudden in China, Alibaba or that group of WeChats and all of this ecosystem of social media users decide that when almost 80% or 90% of the population are already on this channel of doing transactions with each other, and they all of a sudden create a new form of digital currency or payment to accept and do things for almost everything else, and when 90% of the economy is already connected that way, I'm not saying that it won't be regulated, it shouldn't be regulated. It's just that when a means or a form of payment becomes a norm, when the ecosystem decides that it's okay to do business that way, then it's almost inevitable we'll have to call that some form of money. I mean, we'd have to translate that digital wallet, whatever that shape or form that comes in, be it, these guys are giving 5 likes for conversion of money, 5 something else into conversion of money. There is a potential for all of these to happen. I'm talking of the future of potential of digital turning into any kind of form of thing by the ecosystem.
Well, let me escalate the level of discussion. You said money should be regulated. I have total respect for the idea of money being safely protected. But let me challenge / ask a question. I'm going to ask 2 questions and bundle it into one. Audience, if you will participate, feel free to do so anytime. My initial question would be, why regulate money? You have some reasons, I believe, versus why we should deregulate money, as in, say, Bitcoin. And couple that with who should issue the money. Conventionally, money was issued by banks, governments, and so on and so forth. Even some private companies, they produce some money coupons and point systems, mileage systems, which then can be converted to money to buy something, or should it be issued by individuals such as Bitcoins and other many digital coins? Can we handle that question?
It's a wrong question.
Is it a wrong question?
It is a wrong question, because
all right, then that's
money shall not be neither regulated nor deregulated. That's not the problem. We'll give an example. We have a very large-scale case of playing with money, and we can see whether that worked or not, which is the euro in Europe. So all of a sudden, the European community decided to create a currency which is virtually detached from other mechanisms of the economy and how the economy generates and propagates itself. So they thought that money was so virtual, they could be basically regulated further on one side by taking it away from the individual central banks and giving it to the European Central Bank. And in essence, they regulate it at the local level because they cannot control money any longer. It's outside the reach of the individual central banks in the national economies or the ministries of economy in the individual states. I don't think that the exercise was a successful exercise, because all of a sudden money became to virtual and detached from the other mechanisms. So that's the reason why I don't believe in a Bitcoin world, because money cannot detach itself from the mechanism of protecting families and credit and interest rates and playing with inflation and so on and so forth. And on the other side, I don't believe that money can be regulated to the point to be completely detached from the economies, so supranational regulation, but it has to be something in between and in the middle, because it is one of the pillars that enables the economic policies to transfer themselves into labor, into growth, into social security.
Well, I'm sure Michael has a lot to say on it. Before he begins, let me just add in one more thing to challenge Paolo. In case of, let's say, without any prejudice, countries like Cyprus, Argentina, peso. Korea also experienced the IMF crisis like many years ago, 1997 or so. Governments issue the money, controlling the money, regulating the economy, and thus creating the national economy in macro level. But can we let our assets, our fortune, be totally regulated in the mercy of the government itself? And Bitcoin, as a response, is form of the money that is going against those ideas.
So I think that essentially we also see it in Venezuela today, where we have hyperinflation there, everything is kind of going the wrong way. And essentially, again, going back to the point from before, that money is also a promise for the future. And if you have a government, that government should be able to control the future in an area. So it actually makes sense, to, as you say, to have money being kind of local, like in EU, because each government can control the future of that area and kind of promise that people will be able to get the same salary in that denomination after a year, after 2 years, perhaps.
So a question, which was the performance of the Bitcoin value in the first 2 years since existence?
That was first 2 years, that's from 9 till 11, we went up quite a lot.
So if that was real money, there would have been 100,000% inflation?
That would be, probably, yeah.
So you want to live in a country where the hyperinflation is 3 digits or 4 digits?
I'm not advocating Bitcoin as a money.
No,
I think that,
it's a rhetoric question, but that's what I'm saying. But unregulated and making it like democratized, that doesn't mean making it stable if that generates hyperinflation. So
no, exactly.
Money is a difficult concept.
Yeah. So I think that my point with the government is essentially that you can only, as a government, you can some area you can promise something, you can keep a promise of the future. Sometimes it fails, like Venezuela, but quite often you are able to do it within certain limits. You also need to respect that we live in a global world today. In the old days, it would probably make sense to have just a local currency and not move it around. But we live in a global world today, so it means that you only have certain controls over the future and certain controls over the money that way. So it means that you need some regulation, but if you try to regulate too harshly, it will just go out of hand anyway, so it's not going to work. And also, when we jump to Bitcoin, as kind of you take that one, so Bitcoin, what's really the regulation around that? So the funny thing is that if you look at the value of Bitcoin over the last year or 2 years, it's been more or less performing as normal currencies. If you look around what you've seen of jumps in price and so, it's not much different from the Swiss franc, for example, and others. So it's been performing more or less similarly, and the fluctuations are less. And how can that be? So in a regulated country, you have also a national bank that defends the value of the currency. So they buy and sell up to a certain point, and that's also what happens in Bitcoin today. So you actually have a lot of high net individuals and companies that is not only long in Bitcoin, but also in US dollars, and they can defend the price, and that's what's happening.
If I may add my personal opinion, not as a moderator, as in case of Bitcoin, I understand it has a limitation of issuance up to 21 million units, however you call it. And it is not in relation to the monetary policy of any government out there. So when it's controlled and limited, the money has a substantial value of scarcity because you cannot infinitely issue. As opposed to other government issued money, theoretically speaking, you can issue as many as you want.
I guess we need to go back to the concept that money is not abstract. Money is linked to a variety of elements in an economy, like the pension system and the production system. So the moment that the European Union decided to abstract money from the individual national governments and put it somewhere else, it happened that national governments, still in a global world, were taking care of the pension systems differently. We're taking care of the cost of labor differently. We're taking care of taxation differently. And in a global world, this will always be so. So what happens is that we got rid of one of the fundamental mechanisms that government or central banks could help to revalue and devalue to create competitiveness. So we transfer those tensions from the monetary systems into the real economy. That means lower wages, higher unemployment, lower growth. So now, I do understand that we live in a global economy. I do understand that it's nice to think global, but we never act global because everybody of us defends our system. So money is not abstract. If one of these mechanisms, if you get rid of that and you're not certain to be strong with the rest, you as a weak individual or weak economy will suffer the most. And the one which is stronger will win the most. So in reality, the regulation of money is also a way to help rebalancing on the world stage the strengths and the weaknesses.
At this moment, we are inviting any comment to be injected.
Yeah,
David,
I just want to say a comment about this Bitcoin issue, that my prediction is that Bitcoin will die out.
Will die out.
I like the blockchain mechanism behind this, and the blockchain mechanism has beautiful future. But the reason why Bitcoin is not a good money is, there are many reasons, but the primary and sufficient reason is the lack of nominal price stability denominated in Bitcoins. And every central bank has a mandate to try to maintain price stability. Price stability is not only the lack of inflation, but it's also the lack of deflation. Price stability. And behind Bitcoin, there is no such mechanism. Therefore, the value of Bitcoin measured in other currencies, i.e. fiat currencies, currencies which do have this stabilizing mechanism behind them, so the nominal value of Bitcoin measured in other currencies will always be too volatile to use it as a means of payment, salary, or simple saving, not speculative investment, not super risky investment, but simple general savings. You see?
We have some comment to add on to your thought. Can we give the mic to him?
Should I just comment on that one? So, small anecdote. So when I went into high school, every time we had a history lesson, our history teacher would pick one in the class and ask, what happened to this historical person? And, people were usually sleeping as in high school, so they would say, oh, he died. Yeah, right, he's a historical person, so of course he happened. So of course Bitcoin will die out eventually, so that's kind of a statement that doesn't say anything as I see it. However, as I mentioned before, there is actually stabilizing mechanisms today. There are people that are long in Bitcoin and have other currencies as well, and they're willing to defend it. So that's the reason why it's been relatively stable for a while. And that's the same thing that goes on in governments defending the value. But and you are pointing in different directions, yeah.
I get it, but an exchange rate is not money.
No, I'm not talking about. I'm talking about the stability of the price. So that was kind of the point here.
Well, let's have him talk about it and get back to you, David.
Just, I'm not a Bitcoin expert, not at all. I just see it from far. Maybe, in my opinion, we should look at Bitcoin as a currency, but more like a commodity like diamonds. If somebody wants to give a value to Bitcoin, it's because this person wants to give a certain value. For me, a diamond, it's not that interesting. I don't see diamonds as an investment, because if tomorrow somebody decides to flood the market with diamonds, then my investment in diamond is dead. So I cannot control the value. I don't think it's like gold, but it's more towards going to diamond. So in my opinion, maybe it's not correct to define Bitcoin as a currency, more like a commodity, like diamonds.
Do you know why diamond is not an investment? Therefore it cannot be money. It's because if I have 100 euros and I go to you and tell you, can you give me 10 notes of 10 euros and I give you 100 euros, you do that. It's the same. If I never come to you and says, I have this diamond, it's worth 1 million. Can you give me 1 million? You say, oh no, I give you 300,000 because then I need to take it, cut it, reproduce it. So all of a sudden your investment is uncertain. The value inside this diamond is uncertain because you need to transform it further to get the value. With money, this is not so because it is automatically recognized. But it is a mechanism to normalize or to try to normalize the value of something else. So in order to be able to do this, the intrinsic value of this 100 note needs to be consistent. It needs to be fairly stable. So you need to believe that there's something else which is backing it as a 100 euros coin or note. However, that's not so easy because this value can also be affected by many other elements because economies are not that simple. But that makes money something special, which is different than an exchange rate, which is again a value against something else. It's a value against another money because the euro money is not the dollar money, because the euro money is linked to my salary, to my pension scheme, to the value of my house. The dollar money is linked to your salary, your pension scheme, your house. The problem in the euro is that we created that, but we did not align the pension schemes, the salaries, and everything else, so the things are falling apart.
That's why I mentioned more the Bitcoin towards diamond rather than money towards diamonds. Of course, I would like to be paid in euro rather than diamonds. That's of course.
Yeah, you made the presentation on payments, right? And what I think that, if I can, the most interesting thing about, if you like, Bitcoin or payments is not the form of that, but the fact that it becomes digital. That the way we use the money is less and less physical and more digital. There are countries in Northern Europe which are thinking to go completely cashless, so that you will not have banknotes anymore, and you will only pay through credit cards and the internet. And some people think, oh, that's amazing, it's interesting, it's good. And I also thought, yes, why not? I have my credit cards here. I don't care about, carrying the coins as well, because it's bothering me. But then I'm thinking, the moment I don't have the physical cash in my hands, it means that the governments can do everything with my money. They can impose a tax of 10% on deposits, and I have no way to escape from the strength of government to take cash out and to put it into a pot. So there are many consequences with the digitalization is bringing to the world of the usage of money, what money is for, irrespective of blockchain and Bitcoin, which are worth considering.
Uday?
Quite rightly, let's move on from digital. I think I'll take on from that idea of digital because I want to stick to that future of money part with regards to digital being the essence there. Because I fundamentally believe that in the future, the ecosystems of the social media providers and the telcos and all of them will come to play, like the Alibabas of this world in each and every geography. And all of a sudden, these ecosystems will find other forms of, as you mentioned, some points, etc., all being a valid form of transaction mechanism. That could be for buying a coffee, to buying a sandwich, to paying for something else, and all of a sudden these points and all of them are being transacted in these digital wallets within that ecosystem amongst people for various things, paying almost all sorts of bills without actually any cash, sort of almost probably at the entry point, but all of a sudden it becomes a self-regulating mechanism, at which point maybe the system ecosystem provider themselves will create some more artificial form of the points or etc. to add on to the system. Now, this is where I think these things could be heading towards. And all of a sudden there are these mini self-regulated forms of social, these ecosystems forming their own digital wallets, creating their own currencies, because they're able to run the entire economy with it. When I mean the entire economy, there are almost 70 or 80% of the people living in that space. Probably not for a bigger payments like house purchases, but there's all of a sudden, there's this mini revolution on the other side for the mini payments going on. So all of that becomes another problem for the regulator. I don't mean to say money shouldn't be regulated. In the grand scheme of things, to take care of the monetary policies and the fiscal policies of the economies, they should be for all right reasons. It just so happens that operationally on the ground, there will be other forms of money that all of a sudden people will start to accept. And the government should start to worry about sort of regulating these kind of forms of payments which people will start to accept as a means of transactions for the future.
Well, I don't want our ideas kept in the trap of regulation versus deregulation only as we talk about the intrinsic value of the money. I like your idea about money should be tied to my salary, my housing, my value. If I'm living in Europe and I care less about what's happening in the other continent or vice versa. But my question to all of you and to the audience as well, well, who has the final say which money to use? Is it for, my question is, for individuals who own money, who trade money, who own assets converted between money and the assets? Is it for those people, individuals, or is it for the government who has a responsibility to control the economy? Is it the macro level functionality money is good for, or is it the micro level functionality money should be good for individuals? What do you say?
I cannot answer the question because I never had money. So I always want to make money.
All right.
So,
well, if I may,
so
then.
I think that, so essentially that the money, I think that it's kind of a social contract between, well, everyone that uses the money.
Social contract.
Yeah, so you kind of need to, everyone needs to recognize this as a money. And if you go back to the salary thing, it's not that the promise from the state and from the government is not that I can pay, I can buy this for this amount of money tomorrow. It's more like I can still afford to pay this amount of, pay these goods that I need for whatever I'm paid in. So you could imagine that you paid everyone with foreign currency in a country and just accepted that one. You needed to adjust that one in and out. That's kind of the euro today, and it works to some extent. You have many countries where you have an unstable currency, like Venezuela, for example. They would rather use US dollars or some other currency that's stable or considered much more stable than their own currency, or Bitcoin, because in these countries the Bitcoin is much less volatile than their own currency. So that's kind of the setup there.
I think there's another thing that we need to consider, because you said the social contract, and it is money is beautiful, taxes are ugly, smart doctors are handsome, but if I exchange something with you and I pay with pence, and then I have to pay taxes because of the transaction, and I give my government 2 pence, and then I go to the doctor and he says, I need a treatment, he says, take 1 pen, because I cannot pay that, I need to transform it into something else. So it cannot remain at the level of a group of individuals which has special interest on a platform or whatever else in society, because it needs to transform to other group of individuals in the society, and therefore needs to be valuable for many more people. And then you go to the problem of then transferring to other economies that have different currencies and so on and so forth. So that's why I'm saying that it is beautiful, the idea of having money somehow democratized, in the essence that I don't have to depend upon what the central bank decides, because I feel like they make bad decisions for my life, right? But the Far West is equally concerning, because I break all of the other mechanisms that, in a sense, I rely upon to stabilize a little bit my relationship with ugly governments or strange monetary politics.
If I may, I'm going to try something very unconventional in running a panel discussion, because our slogan to start is innovate or move away. I'm going to try to innovate the way we run the panel discussion. I'm going to turn the voices to our audiences. Would you say you as individuals, decide which money to use? Please raise your hand. Versus, if you believe that government should decide which money you should use, and you raise your hand. You get the idea? Okay, first option. You believe you as individuals should decide which money to use. Please raise your hand. Raise high. Raise high. I can't see you. Please raise high. We have about 10, 15, 20 something. Okay, got it. Thank you. You as individual believe that government should decide which money you as individual should use. Please, you raise your hand. Please, raise high. Okay. Well, turns out some are equal, about.
A bit
No,
more
we're
for the
not
last
balanced.
category, as I see it. But yeah, I actually would like to ask another question because I think this is funny. So we discussed kind of money and the promise and the area and so. So every time you have a subgroup that uses some economy, it could be anything from a company to miles to anything else, to Bitcoin even, then you need exchanges. So you need some kind of exchanges. And sometimes it's not really easy or possible to exchange my frequent flyer miles for dollars. I can usually do it to some extent, but it's not that easy. But let's imagine a future where essentially everything that we have is exchangeable. So all these miles, all these coupons, everything will be in a digital analog, and you can exchange them somehow for either government-backed currency or for other stuff like that. So everything is exchangeable. So that's kind of one way of the future. And the other future is that everything moves away from that. So we don't really have subsystems of smaller economies. We just denominate everything in a currency. That's kind of a world currency or so. So which direction will it go in? A lot of smaller exchanges or kind of one big currency?
So the problem in finance today that brought to the financial crisis is fairly simple. I'm moving a little bit on the side. And that's because all of a sudden, the asymmetry of information between individuals and banks was as such that the value of the financial assets was not related to the cost of getting into the financial asset, right? So the regulation, which is a form of single monetary policy, for example, is meant to try to realign this asymmetry of information so that we all agree a bit more about the value in an asset and how much I'm willing to pay for that asset. Now, before we divided the crowd, that the listeners, into two groups virtually, because we said one group raised the hand and said, I believe that the money should be regulated or given by the government. And then we have another half that raised the hand that said, I believe that I should choose my currency. So we didn't have two parties. We had 51 parties. Because all of the guys that said the government had the same currency, the same money, the same reference. All of the others could have potentially 50 different ones. Now, a world where there is a liquidity to assess the value of all of those 50s is an utopistic world. It cannot really happen. It's nice to conceive, but it cannot happen because they can change their mind. Their perception of a value of a Gucci bag is different in Italy compared to China. In China it's worth more, because they like it more. But so that is what you need basically to harmonize and to regulate.
Now that we have 5 more minutes to finish up our discussion, I'm going to move on to one more question, which is the final question, and try to wrap up the idea altogether. And we're going to move on with our ideas that's stemming from the ground. What's ahead? What is ahead as future of money? What I mean is that what is the infrastructure of money being advanced from very primitive stage of exchanging shells and irons and papers to a form of some digitized channels? What is analog/digital forms of infrastructure that we are seeing and eyewitnessing that's going to dictate the future of money?
So I think that what we will see is some of the things that I kind of elaborated on before. So I actually think that we will see that everything that we have will have a possibility to become money. So essentially, I think in the future that I'll be able to exchange parts of my house for something, and that will be much easier today than it is tomorrow.
So you don't sell the entire house, but you sell part of the house.
You could sell a smaller part of the house to you, and you would know that the house is still there.
You subdivide the money you have.
Yeah, essentially that's the setup you do with banks today, and then the banks are allowed to issue government-backed money because they have a lien in your a claim in your house. But in the future, I think that process will be much simpler, and we will see that everything becomes much more money-like.
The problem with money is when the value of money is detached from the need of money. And that is a risk in the financial market world because we keep on virtualizing money in very funny ways. However, I think it's inevitable that money will become more and more digital. I hope it won't be so digital that it's completely out of control of individuals, because here and again, I think at some point that having money under the mattress can be a good way of fighting against government that wants to raise taxes to 90%. Maybe it won't solve the problem, okay? But at least you feel it's yours. So I don't believe in a completely cashless economy. But I believe that the way we are going to use money in the future is going to be different. For example, I was not much excited, or I'm not much excited to read that, or to see, I don't do it, that I can exchange money with WeChat, or today we were discussing Kakao, to pay something in a restaurant with the iPhone. But I was excited when I saw that banks are allowing now to withdraw money from the ATM machines using an iPhone instead of a credit card, because I get rid of the credit card that bothers me, in my wallet. And it happened to me a few weeks ago that I was in New York in a taxi, and then I couldn't find my credit card, and I realized, oh, I forgot the credit card in the restaurant. Like 10 years ago, I would have immediately rushed back to the restaurant to pick my credit card, and then I said, hold on a second, I've got my iPhone, okay, I can call them, keep the credit card, pick it up tomorrow. That was more important to me than the credit card itself. So that was excites me in the future of money, the fact that you can access it in ways that we didn't have before. But I do believe there's a fundamental value of money underneath cannot be changed so easily.
Good. Uday is smiling. Share your thoughts.
Yeah, hi. I obviously disagree, and I fundamentally believe in cashless society in the future. It's guaranteed. It's bound to happen.
Cashless society.
Yes.
In the future.
Yes, guaranteed, and it's bound to happen in my view.
No more
And
paper money. No more cash.
No, none at all. None
Why?
at all. The way everything is going digital, and there's absolutely no need for it to hang around in paper form. I just don't think there's a need. I mean, I think electronic devices, instead of you giving 100 papers, you could give every guy an electronic device which works 24/7. I mean, let's leave that part, but the idea is, you could probably store that in various shapes and forms and secure it. Let me complete my thing to give you the chance, Paolo. The idea being there, I'll give you a hypothetical scenario again. The idea being, let's say, what if I give you an app? I just won't call it a bank tomorrow. Let's say the bank gives you an app, and my bank gives you an app, and it puts 100 points in that app. And all of a sudden I tell you, with that 100 points, they're equal to, 1 point is equal to 1,001 or something, and you can get a sandwich or a coffee in whichever shop you go. And it exactly matches it that way. And all of a sudden I also tell you, tomorrow you can put in a million won, and it converts into a million points, etc. in exactly shape form. And everyone starts to accept this one app as the means of forms of payment for everything. And I will also tell you in the future that the ecosystem is transferring in this manner, and you could probably pull it out. And all of a sudden you have this self-regulating, I'm the one who created the app, and all of a sudden there's an option for me to create more points in this. I mean, I think these things will happen in short ecosystems. That is what I fundamentally believe. And all of a sudden I don't believe that deregulation is the way. It has to be regulated. It's just that these ecosystems needs to be watched out for when they start becoming bigger and bigger in this space, other than the money which government normally distributes.
Can I
Anyway.
be-
All right, Paolo, quickly on your last minute thought, in less than a minute.
Just
Yep.
ultra short question. So the question is essentially, when you say something about the future, and something stops in the future, we need a timeline. So when we stop printing money in Korea?
I mean, this is a geographic, this is a bigger question in terms of geographies. I mean, I'm not talking of the entire globe, and you can talk of advanced economies who uses technology versus much more economies who don't have. I mean, at that rate, Africa is already super digital in the sense that they've skipped the entire stuff. They can do everything with mobile phone in terms of transferring payments. Details are a bit too much, but the point being, geographies play in different ways.
We have a final minute to finish up. Can you give us a final thought?
Maybe something a little bit not so fitting, but I think that a few years ago in the Soviet Union, they tried an experiment giving people coupons, saying 10 coupons. With 10 coupons you can go into a shop, and every coupon is equal to a sandwich. And then they started to say, now 2 sandwiches are equal to a jacket. And then, so it didn't work. Okay, so all of a sudden they were not using money because they couldn't have money. They used points. So I don't think that is the future, is maybe the past. But I also want to say that this is the very last. When in Greece, through the financial crisis, governments were imposed, the government was imposed to withdraw money out of the deposits of individuals in the bank accounts, to take like 10% to pay for the lack of money in the government's wallets, people said, hey, hold on a second, that's my money. But it was easy to take it because it was virtual, right? You could take it out. So watch out, because the moment it's fully digital, it's not necessarily your money anymore, right? So there has to be protection around that.
We're going to have audience, 1 or 2 person, give us 1 minute version of what is the future of money, your version. 1 or 2 person, 1 minute only. Anyone? Yes, sir.
I have some questions.
Can we?
Pick up the jacket and we fight her.
Yeah.
I think that
All right, 1 minute, please.
yes. So different social system requires a different kind of money, which is the essentially measure of the economic system. But if it is different, there will be several different equilibrium points. So there should be several different money meeting the requirement of each equilibrium. So there will be the supply and the demand arbitrage algorithm between the different kind of money by the stabilizing algorithm, buy and the seller. So I think that we need not worry about the regulation. There will be local regulation in each place, and then the total regulation will be automatically achieved by the market, seller and the buyer. And then if there is inequilibrium, it will be automatically by coming from the arbitrage trader. So that seems to be the most logical solution.
I don't remember if it was David yesterday or somebody else that spoke about the values and the regulation. That somebody was discussing that, and the behavioral finance and the equilibriums in terms of, was it David? Okay. So these equilibriums can be very painful, even in regulated economies. In unregulated economies, these equilibriums can be extremely painful. In super-regulated economies, these equilibriums can be very painful. So there has to be somehow a balance. But then I go back to my point before. Regulation is essential for one reason, not to impose on people to do something, but to realign the asymmetry of information between the value of an asset and the price of that asset. In the financial markets today, markets became so bumpy compared to the period 1950s to the 1980s because through financial innovation, the distance between the value of an option, the value of a bond, the value of credit, compared to the price of that option, of that bond, of that credit, was so large that could be traded by the financial institutions. So individuals were not knowing what they were buying for. But it goes worse than that, because you don't have only the value and the price in the financial world. You have the price of risk, which is a third dimension. I'll give you an example. If I go to Starbucks and I ask for a sandwich and they say this is $5, okay, I buy it. Then I go to Conrad, the nice hotel on the side, and I say, can I get a sandwich? And they say, it's $10. I'm like, hey, $10, I can buy it for $5 there. But the guy says, well, this is with prosciutto di Parma. And I say, okay, I can pay $10 for prosciutto di Parma, because somehow I can assess the value and the price. In the financial markets, that's not so easy. That's why we need more regulation today, because we need to bring back that distance, the gravitation between price, value, but also need to price the risk. We are going to discuss after, are robo-advisors pricing the risk consistently for the customers? No. Are banks, well managers, pricing the risk consistently for the customers? No. Are they pricing the cost of transaction? No. Maybe the robo-advisors are cheaper, but they're still not solving the other problem, which is the price of risk. So it's not that easy to say that the market forces will create equilibrium and everything will work, because it doesn't happen in atom equilibrium. It does not exist.
All right, time limited. I'm going to wrap up the dialogue. We love to do it all day long, but we got to close somewhere. Imagine this entire room is filled with the population of the entire world, and it may be so because we are representing entire world FinTech Forum from many different nations. We saw that half of the room represents one idea. The other half represents some other idea. Well, we can argue forever which one's going to win, but one thing is true, commonly speaking, we are writing the history. Is it not true? So, from today and onward, because fintech is a new industry, money was there and will be there as long as mankind are living on this planet Earth. How fintech will evolve, change the forms and the infrastructure of how the money flows, it's up to us. Our expertise, our passion, our capability will change the shape and the flows of the money. And how it's going to change, we'll see next year, we'll see next year, we'll see in 10 years, and we're going to know how it changed. Thank you very much, gentlemen and ladies. We'll see you next session. Thank you again. It was Michael Gronager, CEO of Chainalysis. It was Paolo Sironi, IBM Wealth Management. It was Uday Nimmakayala, CEO, Wealth Objects. Thank you.